Boom, boom. What's going on, guys? It's Ricky with Technical Solutions. Hope you guys are all having an amazing day. In this video, I'm going to be covering 3 simple steps that I would like you guys to ask yourself before you take your next position. If you guys have ever struggled in getting into a stock a little bit too early or want to get a better understanding on when to get into a stock, then I hope this video can guide you in the right direction. I hope you guys enjoy. What is going on, everyone? One recommendation that I would like you guys to have, if it's not too much to ask, is to have a pen and paper so you can pause this video right now, just so you can take some notes of the 3 major points that I'm going to try to make today. The first one is asking yourself, are you getting a good deal? Remember, you are investing in the stock market to grow your account. An example that I can give you that's very easy to understand is like something like ticker symbol CPG. So CPG has something that I call a horizontal pattern. It's very easy to understand where the low points are, right? The overall support at around $6.50, as you can see down here, and the overall resistance at around $8. It has a very horizontal pattern, very consistent pattern. This is a 180-day analysis. The reason that I like to trade horizontal patterns is they're very, very easy to determine when you're getting a good deal, and you could also be able to easily determine, when it's going to start to reverse, being able to see the overall reversal when it breaks above this 180-day EMA. So the first question that I would like you to ask yourself is, do I understand that I'm getting a good deal? And if you're not getting a good deal, let me show you an example of maybe what not a good deal would look like. So right now with CPG on how it's currently trending, you can see that it's above $8. So you can ask yourself one of 2 things. Well, hey, if I would have purchased this, maybe just a couple weeks back when it was actively, a really good deal, when it bounced at 650, which is a common support where it's bounced at multiple times before, and then it started to trend above the 180-day EMA, showing signs of an uptrend pattern, that was a much better deal than where it is right now. Am I forcing my trade, or is it something that that I think that can continue to actively uptrend? So again, this is something that you're going to have to make sense of, but it's showing that it's a little bit more on the overbought side, meaning that it's not such a good deal right now. It's a little bit more on the a little bit more on the extended side, so it could continue to trend up. There's no question about that. I mean, it's pushed up to, based off previous patterns, around 925, right? So it still has the potential to continue to trend up. Is this a position that I want to take, understanding that the potential for profit is not greater than the potential for loss? So therefore, we have a thing within the Learn, Plan, Profit lesson library that we call the golden ratio, meaning that the overall potential for profit outweighs the potential for loss. So again, just asking yourself the simple question, are you getting a good deal? And then doing a technical analysis on, kind of the larger charts like 180-day, maybe the 1-year chart, and seeing, hey, is this a good deal at the current price point that it's at right now? Or could I have purchased that at a much lower price point, and should I just wait for this thing to pull back? So again, just food for thought. The second one, opportunity costs. I think this plays right in hand with CPG. It's actively trending up. There's no question about that. You want to make sure that whatever it is that you're investing in, at least that's a step that I like to take. I want to make sure that whatever I'm investing in is actively trending up. So I want to make sure that the opportunity cost is worth it. And what does that mean? Again, the golden ratio, that the potential for profit outweighs the potential for loss. So now the last thing that I would like you to ask yourself is to understand the overall pattern. And this has to be one of the, I think, most overlooked concept when it comes down to investing in the stock market. But as you can see with CPG, I was able to easily determine that based on previous patterns, it has a common support at 650 and a common resistance at $8. With that understanding, I understand that this is a margin of profit that it has to offer, and I know that it offers a very horizontal pattern. But when I talk about understanding the general pattern, you want to understand how it moves when it begins to actively trend up and when it actively starts to trend down. The reason that's so important is, you've identified a stock that you find is healthy, and you find, the first one, you found out that it's a good deal. You found out that the opportunity cost is worth it. The reason that the last step puts everything hand in hand is because if all of a sudden, right, there tends to be a break of pattern. If there happens to be a break of pattern, then you want to make sure that you as an investor can identify that and that you yourself can cut losses because you don't have to rely on anyone else. And that's my goal for everyone that watches this video, that I personally mentor within the Learn, Plan, Profit lesson library and with my overall trading community of Technical Solutions. I need you guys to understand the patterns that you invest in. You could easily determine when a stock is either breaking its pattern or if it's just pulling back. And that is what has led to my success. If you guys have watched any of my videos, I've taken 2 losses this entire year, right? My average rate has been anywhere from $2,500 to $3,000 every single week. And the reason that I've been able to do this is because I understand the patterns that I am trading. There tends to be sell-offs with swing trades, and there's no question about that. If you look at the overall pattern for something like CPG, CPG has when it's actively trending up, it's not like a momentum stock. It doesn't just shoot up. So the characteristic and the pattern of something like CPG, and every stock is different, and that's why you need to do your own personal analysis to understand the previous patterns of the stock that you are investing in, because something like CPG, pushes up, has maybe a red day, pushes up, has 1 or 2 red days, pushes up, has, maybe 2 or 3 red days. But one thing that you could see is that it does a very good job validating this EMA line, this 180-day EMA, as a support, right? Every single time that it actively trends up, it does a very good job validating this as a support. Because if we see that the candles don't actually bounce above the 180-day EMA and they actually start to actively trend below, and it shows a reversal pattern, something like this, then you could easily determine as an investor, hey, I first identified the stock that was a good deal, it was actively trending up, and that the opportunity cost was worth it. It's progressively moving above and holding above that 180-day EMA. But all of a sudden, after the sell-off, let's say, it actually continues to sell off, then because it broke that pattern that you first identified, that you could cut losses because your pattern that you first saw value in is no longer valid. But if I would have purchased CPG when it was right here at around $7.80 and it pushed up and then it got rejected, I would not have cut losses because there is not a break of pattern. I would have originally, before I took a position, I could have seen how far away it was from this EMA line, and I could have easily determined that, hey, it is a little bit overextended from the EMA line, and I need to understand that before I take my position. And because of this sell-off, that doesn't mean that the pattern that I first saw value in is no longer relevant. It just means that I got in a little bit too late. But as long as it continues to hold above this 180-day EMA and it continues this ascending uptrend pattern, then that is exactly the first and single pattern that I saw value in when it came down to investing in something like CPG. And make sure that you understand when there is a break of pattern or when there is a pullback, because those are two completely different things. And that is something that is going to take time for you to master, but it's something with time that you're going to get better and better at. I want to thank you guys again so much for watching. If you guys like the way that I break things down and find it easy and simple to understand, be sure to review my entire YouTube channel. I have a little bit over 750 videos that I've already published on YouTube for free. Also, I do have a free trading community. It's the third link in the description. It's called TechBot Solutions. Over 95,000 members worldwide. I am also going to be hosting a free 3-day training. If you guys want to partake in it, be sure to click that first link in the description, and I would love to be a part of your success. Thank you guys again for everything it is that you guys do. Continue working hard, continue following your dreams, let your passion be what drives you in your success. And like always, guys, let's make sure that we end the year on a green note. Take it easy, team.
I'm at my prime. Yeah. I'm at my prime. Whoa. Have I gone too far? Do you detect something different? If you look